UltraTech Cement just come in, and we have the revenue figure at 11,830 crore rupees, whereas the profit after tax is at 1,700 crore rupees. Both of these parameters are above the ET Now poll. The EBITDA is at 3,307 crores, which puts the margin figure at 27.9%. So largely, if I have to compare it with the ET Now poll, UltraTech Cement has managed to beat expectations through and through. The production cost during the quarter, though, and I think that's going to be a key parameter to watch out for, given the fact that, just like with many other commodity companies, UltraTech Cement too has had to face the brunt of input cost inflation. So they say that during Q1 of FY22, the production cost increased 11%. This was largely on account of higher fuel prices. The capacity utilization as well was excellent. Well, again, when you compare it to the corresponding quarter, it was at a meager 46%. But, like we've been saying, at this point of time, comparing with the corresponding quarter is practically moot. However, having said that, in Q1 as well, economic activity had trickled down quite a bit because of the second wave. So the effective capacity utilization was still not at its best. It was at 73%. They have their expansion program as well, which they say is on track and is estimated to be completed by the end of FY23. Yes, there was a bit of delay, but now they're putting in the target completion date by the end of FY23. A quick chart check of what UltraTech Cement has done, and well, quite a sharp spike and then a drop in the stock price, as you can see on the intraday chart, which will be just coming up on your screens. Okay, we have Vivek Iyer joining in on the show. Hi Vivek. I think a great set of numbers by UltraTech Cement. Tell us a bit about the capacity utilization, because this was a quarter two that was hit by the second wave, and also how is the company tackling the increase in costs?
Well, absolutely right. In fact, when you are looking at the numbers of UltraTech Cement, it's a clear beat across most of the parameters, but you also have to keep in mind that post the results of ACC, markets were actually pricing in a beat across the entire cement universe. So markets had priced in very high expectations, and this is something that actually has led to a little bit of a downtick, given the fact that the costs for the company have actually increased 11% on a year-on-year basis. When you're talking about the capacity utilization, a couple of factors, especially when it comes to UltraTech. Number one, you're looking at UltraTech standalone, most of the cement plants. The company says that the capacity utilization was at 73%. However, and this is against a 46% year-on-year. Of course, you can't really take the base year into effect, given the fact that we were in the midst of an extreme lockdown last time around. This time around, most of the plants were functioning. Also, looking at this capacity utilization figure, it appears as though UltraTech has managed to ramp up Century assets as well as the other JPA assets as well quite significantly, and which is why the number has come in quite high. However, when you're comparing it to ACC, and this is something that will happen given that ACC trades at a much lower multiple compared to UltraTech, the numbers might look not as exciting as ACC this time around. However, clear beat across most of the parameters, with the company giving a good beat across the core EBITDA. We were seeing an EBITDA of just around 2,880 crore, EBITDA coming in close to almost a little over 3,300 crores. So clear beat coming in from UltraTech, and it'll be interesting to see, what kind of upgrades do come in as far as the EPS level is concerned post this particular number. Also, we are still awaiting the company presentation, which will give us an indication of the volumes that the company has managed to deliver in the quarter gone by.
Okay. Yeah, I think that volume growth number will be watched out for when it comes to UltraTech Cement. But in the meanwhile, let's analyze, the other parameters of UltraTech Cement, and I think we have with us a few guests, Binod Modi of Reliance Securities and Abhishek Jain of Arihant Capital. Gentlemen, good afternoon. Binod, over to you first. I think a thumbs up across parameters. Your quick take on the initial numbers that have come in?
Of course, a very impressive number delivered by the company, more than 10% kind of beat at EBITDA level. And I think EBITDA per ton based upon volume we assume it's coming more than 1,500 rupees per ton, so that is quite encouraging. And I think in terms of even cost, though there have been some sort of surge in terms of freight and power and fuel, but overall if I look at at the input cost per ton, altogether raw material as well as power and fuel cost, it appears that the company has done relatively well on sequential manner. So of course we understand company was taking lots of initiative. We also understand that company had reduced significantly its petcoke usage and shifted more towards coal, which was almost 15-20% lower compared to petcoke cost. So I think these all initiatives have all together helped company to contain its overall input cost during the quarter. So I think number EBITDA per ton 1,500 rupees plus, that looks to be quite encouraging.
Abhishek, do you think that this one being one of the more larger cement companies, the largest in fact, would be better placed to handle the kind of cost inflation that we are seeing as opposed to the mid and the small cap cement names, which would perhaps give UltraTech as well its edge?
So we have seen in the past also the larger players, because of their national presence, UltraTech being a pan-India player and with the kind of backward integration they are having right now. So even if the cost pressures are there, they've been able to pass on the large part of their cost going forward. And the numbers are also like the EBITDA per ton, it's a big beat itself. So I personally think larger players at these valuations may look little pricey, but on the overall basis they are much more prudent, because we have seen the prudent cost pressures are really visible on the cost at this point of time. But larger players are doing better in terms of passing the cost to the consumers.
Well, I'm afraid that's all the time we have on the show. So Binod as well as Abhishek, thank you so much for joining us today, and a quick take for UltraTech Cement's numbers. We'll wait by for the presentation and perhaps touch base once again with Vivek on that volume growth number, which is the key parameter. But on that note, we're completely out of time. Before we let you go though, Amazon Prime is launching hundreds of new products for its Prime customers. Here's more to discovering joy by availing special offers and discounts this 26th and 27th of July.